All right, so major questions right now are basically like patterns and stuff to enter into trades, more the entry signals. And this is a good question. So we're gonna look at. I'm gonna try to use an example specifically from Friday, and yeah, there's a few examples. So I'm gonna talk about Tesla, and then I'm also going to discuss Apple. These are the best examples in my opinion right now. Use the 90 MA for there, and then I'm also going. I'm not going to use. We can use opens as well, and then I'll use volume. Okay, so I'm not always using all the indicators, etc. I want to make that really clear. I'm not always using these, but for the most part, I try to keep these in here. Now, key levels. Obviously, if you don't have the key levels marked, you can always go into watch list to get them, and see exactly why we use those and what we're looking for, right? So if you want to see those, you're just going to go into watch list. Obviously, I just want to show this for the recording so people can see. You're just going to come in here, go into watch list, or you better yet, you can just go into bots to get it even quicker. Just type in exclamation point Tesla, pull up every single one, right? Where they are, why we marked them, etc. You'll see them in there. But from this, we know a few things, right? So we know one, we have our previous low at 218 that on the local chart. We're on the 15, we're on the 5 minute for day trading, right? So just looking in here, we're gonna look at a few things. We have our level here that we had a double bottom at, right? And then we also have our 216 major level. So we know we know a few things about 216. And 216, you can kind of just make a whole box for it just because it was so big and you can see how influential it was to the team. So I just have this marked right here. Okay, so we come down, we break that low, and then we wick down to 216. Now, I wouldn't have been immediately sold on the idea of buying Tesla there. Okay, I want to make that really clear. This would not have me sold yet, just to bounce off that level. But there's a few things that we're looking for some continuation back to the upside that would have pushed me maybe into this entry level. So one, we're not just going to watch Tesla. We're also going to watch the indexes, which we always talk about here as well. So we're going to go back into this time as well for 905 around this area. But one, we can see a few things off rip that are interesting here, right? So one, we're getting the bounce of this level. Let me just move this over a bit so you can see a little bit more. So you can see one, we're getting the bounce off of the level. Then we're reclaiming the level here as well, 218. And this really would have been a buy signal as well for a scalp just because of how you're reacting to that levels, right? So we know one, this is our double bottom previous low that we had there as well on a 5 minute from about a day or two ago. So we actually can see we come down, hit our 216 key level, bounce back immediately, retest, and then keep going. So that would have been one signal to buy there. But let's hypothetically say you miss it. You know, I miss trades all the time. Like on live, we always talk about missing those trade opportunities. And we didn't really have a volume signal here, right? So that's important to realize. But if you come over to SPY again, so I'm always watching SPY volume almost over everything to a certain extent. SPY volume is my favorite thing to look at because it's going to give you an overall viewpoint, and you're going to go to usually the 1 minute to get the best viewpoint of volume as it's coming in. And so if we go back to that 905, 910 area about right here, so when you start bouncing and you're almost in tangent with SPY to with Tesla. So that's also something to keep in mind. So you can see you come down and then you actually are seeing a little bit of a volume increase here. You pop back up as you move sideways, volume dies, and then buyers continue to push you up. And so every time you see this, you get a push up with increased volume, sideways action, decreased volume, another push up with increase, et cetera, et cetera, et cetera. It kind of continues going right here. But this is primarily where you're looking at that trade, right? So this is really where that trade is formed on Tesla, specifically in this time frame, which you can continue to see that every time you push up, it's with volume. Any stagnation leads to lower volume, as you can see here. Lower volume comes in here. You push up with more volume here. So I'm using SPY because this is generally the best way to look at intraday volume on the market and which direction you're moving. And we know Tesla is going to really be affected by SPY as well. So we go back to Tesla and we look exactly where we are. We can actually come back into this level. And you can see on here as well, maybe the 5 minute chart doesn't paint the best picture, but you can also see here, you come down with increased volume. You are increasing volume on the way down. And you see a little bit of a dip, but overall it is decreased. But you can still see each move down comes with increased volume. And you can also see here as well, that one there, and then you actually reclaim that level here on the 1 minute, which you can also see that you're reclaiming the 90 MA on the 1 minute as well. But we're also always looking for that 5 minute action on the 90 MA for maybe that continuation or mainly that support. And Jay's even pretty clear to say he doesn't wait for the 9 EMA most of the time to get his entries, but he uses it as a support after. So once you start breaking above that level, then you start to use it as a support. And what I mean by that is how you see this type of action here, to where you see some of these flags coming in for an entry opportunity. So you flag here at 221, you bounce back up to 223 roughly, and then come back down, etc. So that's ways to use the 9 EMA here. But as you go back to the 5-minute chart, you can also come in here and see as well. If you didn't get those opportunities, at the 218 level, back real quick. Sorry, it keeps messing where I am. But if you didn't get that entry right there, the next level, and the almost maybe the not guaranteed, but one of the safer entries would have been right here. So you get that push up, and then we see on the 9 EMA, you have a full candle hold, even though it's not the most beautiful candle. And then you hold again here on 935. So this would have been my entry signal here if I didn't get in here or here, right? And then from there, you mount 9 EMA, and then you also mount the VWAP. And every time you touch VWAP, it's a buying opportunity all the way through. And you can see you do not lose the 9 EMA all the way through that as well. So you could actually let your runners run basically until this point right here at 225.6, because that's the next time that you lose the 9 EMA on a daily level here on the 5-minute. You have questions specifically on Tesla. Apple's gonna be a little bit more easier to track, but this is ultimately was a pretty good example of what I was looking for here as well. And this is actually, we're covering this live on Friday also. Any questions? Right? And y'all can talk during this, so don't feel like y'all can't. The workshops are pretty loose, so yeah. So if y'all have questions, or if you're working, that I understand as well. Comments.
Yeah, Tyler, I just have a question. So with the 9 EMA, you're not using that as necessarily an entry point, but I just want to make sure that I'm understanding it. You're using that as your indicator as like support. So like once it breaks that 9 EMA, then that would be your decision to get out of the trade.
Yeah, so it will help you realize if you're leaving like a runner. So Jay's video definitely goes over it really in depth. I think I have a video of it as well, and I can link it after this as well. One sec. Sorry, I had a cough. So I'm using it as a support to get the follow through and to maybe give me guidance on this trade as well. So I know when we're starting to see more weakness on Tesla or whatever stock we're looking at. And that's why we use it so much intraday as well. So for instance, even here on the downside opportunity, you saw a drop here below the 9 EMA, really hard drop. And then you don't really get necessarily a flag. You can kind of see that continuation here also. So we come in. So you can actually see on the 1 minute, you got a quick push back up, right? So you drop and then immediately push back up to that level. And if you go to the 5 minute, you can see on that 9 EMA, where's it at? You can look exactly where it's at. It's almost a perfect touch of this range also, leading into that next candle, which could have got you a short signal for a scalp back to the downside to get that 216 touch down there. So, right. So it's really helpful if you're not in the play yet or you didn't get the perfect entry, because usually when you flag or you get any type of continuation on this, you can see it'll just track on that 9 EMA right there as well. Now, sometimes I'll use it as an entry signal, don't get me wrong. If like, say, hypothetically, if we go to some like SPY and you can see a flag, or even here, right? So you see a hold, and like I said, it would be like your third entry signal. If not, you didn't get back here. You can use it that way, but you might miss some of that beginning entry opportunity. And it's going to associate less reward, but a little bit less risk as well, because you're able to use this as a support signal and a support entry as well. Hope that answers that question.
Yeah, it does. Thank you.
Yep. Just wait. Someone has a question. I'm going to watch them type AWOL. Dave, did that make sense to you? Then this is specifically your question. We're going to have a full lesson on this as well. We've had one already, but we're going to go more in depth. And I definitely think that having PowerPoints and having like kind of not paper, but like something in front of you to look back on, like some notes and stuff, is definitely going to help you guys. Even as I'm making the risk to reward, I can just see how having the picture in front of you is going to help you tremendously. Yeah. Okay. Notes would be nice. Yeah, and so that's another thing too, is I started the cheat sheet and I had one on my iPad, but then there's also just so much stuff. And so probably what I'm going to end up doing is, as we have these PowerPoints and have these lessons, is maybe highlight specific things that you guys struggle with, or honestly, you probably can make your own cheat sheet as well. But specifically what you guys ask the most questions on. And when we go back and do like how we did the Google Sheets with questions, like what you'll highlight the most, and that's what we'll probably put there as well. But really just putting this on paper, I didn't think I personally don't like that type of stuff, but I know some people learn better from that and just having it. So I want to make sure y'all do have that. So you want me to go to the next the next one? One sec. AWOL took a loss on Friday. Curious as to whether my methodology was flawed. Took a SPY put as SPY broke a buying channel as it was rejected at a key level, then kept it pushing up. So you're gonna have to show me on a chart where you did that. I need to know on a chart. You have to send me a picture or something, because this is gonna be too hard. So just chart it real quick, and then I'll get back to your question. I'm gonna go over Apple really quick also. I think Apple's gonna really help you guys understand and look at earnings maybe a little bit differently as well. So what I'm going to do really quick here is I'm actually going to wipe. Actually, we're not going to wipe that. We're just going to get rid of these. So these I'm going to get rid of. I'll keep that one since we hit that one as well. Since it mattered, obviously. All these were down here at these lows, so it didn't matter. But the big ones I want to look at. So we had on Apple. This was a great day trading opportunity as well. Now, first, before we even go into Apple, I want to address why I picked it. And this is a little bit more in depth. But when you're looking at stocks specifically, and someone asked me this the other day, I think it was after hours yesterday. Someone said, if we're always looking at ES and NQ, why trade stocks and not just trade SPY and Qs? And it was a great question. It was a really good question. I think sometimes you have edge. And if you are familiar with trading and all, I think finding an edge anywhere is going to be helpful. Whether you're playing sports, whether you're at your job, as a mechanic, no matter what you're doing, having an edge gives you an advantage, right? And I think in trading specifically, when it comes to directly trading money, I think having an edge is, maybe even more impactful in this field. So if we look specifically at Apple, there's a few things we know. We know before Apple reported earnings the day before, we knew that Amazon was killing the market, and we projected that everything was just going to crash and crumble the next day. And then Apple reported earnings and it was strong. But what do we know from that? We knew that Apple brought the market back up because before Apple's earnings, it was just collapsing. And so Apple, we knew, was extremely strong. So in my opinion, coming to the market the next day, the strongest stock of everything out there was going to be Apple. Why? Because they just reported earnings and they basically just saved the economy, right? Just for a short-term viewpoint, right? Just, obviously not save the economy entirely, but, just food for thought, right? So as we're coming in here, I knew going to the next day, highest percent chance of having and holding upside is Apple. Why? They reported a dividend. They reported some crazy numbers on subscriptions, and they just did good compared to everything else, right? And so going into this, I knew going into the day, even if SPY showed some red, which I'm going to show you here in a second, Apple would most likely hold up better than even the index. So if I wanted to go and play the upside, I knew Apple would protect me. And when I say protect me, it would have less chance of hitting stops, less chance of wicking down, less chance of going against my bull thesis trade plan because it's just that strong. And this is why me and Jay always say, when the market's strong, don't always go for the weakest stock. Now, sometimes there's laggers, but there's a difference between a lagging stock and a very weak stock, right? So for instance, as we look here, I'm going to show you right here. So we're going to look just here on the 5 minute. We can see as the day opens up, we push up. Obviously, we didn't got no dip, nothing in the first 10 minutes. And then we kind of flag down to 150.6. If you come back, we can go all the way back. This is your previous high that you had here on Wednesday the 28th right here. Right? It's a perfect bounce off that level as you zoom in. This is one of the key levels that was marked out as well. And then you can also see you flag right into it, right? You don't even get to a 90 MA. You don't get any of the great stuff you really want. You just flag, hit it on the VWAP, and bounce back. Also, a good thing to look for is bounces on VWAP and how you respect it, specifically on really strong or really weak stocks. Because hypothetically and most likely, what you're going to see is on the weak stocks, you're going to see a retest up to VWAP and usually get rejected. Maybe not even 90-minute touch. Right here, you get that, and then boom, you bounce. So you bounce off that level. In relation, look at what happened here on SPY. SPY gets a little bit more of a dip, in my opinion. You can even see a big wick down to about 381 roughly. So you see basically you go up to almost 383.5, and you see almost a $2 or more drop, almost $3 to the downside, right? That's a pretty big swing here on SPY. But on Apple, you're only seeing about from 151.8 down to 150.7, so about $1 drop. Now, and the correlation is gonna be a little bit different. You can see the move here is a lot less impactful on Apple, right? So we can see it's a lot less coming in there. As far as Tesla coming in here, look at what happens with something like Tesla, right? A little bit less decision, massive downside gets pushed down here. It actually pushes you down to your 216 level. It's almost like a $10 drop here on Tesla from that move that we saw from SPY, right? So you can see the difference between a strong stock, maybe not a weak stock, but a more influential stock that can be affected by SPY, something like that. And then we see a strong stock that moves very good. So having your position here, and I can even come over to TOS because I had something pulled up. You can even see if you come in here, look at that slight pullback. Yeah, you pull back, this is a 0 DTE contract, but you can see that you pull back, 20% roughly here. When I go to Tesla, I can guarantee you if you had a call there, it would be down almost 70 to 80% off rip. So you can see, whoops, my bad. Sorry, this is back here. So you can still see, right? You push up from 220 down to 150. So that's roughly a 30% pullback. And again, still on Tesla, you'd be of 0 DT, you'd be down almost 100% at that time, like 80% on a $10 move to the downside. And then you proceed to bounce back up and continue this move back to the upside, right? So this is just comparison from a really strong to a really weak stock. And I just want to give this example as well to show the difference here. And if you go with something like SPY, I can give you a really clear example here as well. So we go to SPY, and might be a reason why you might not want to trade something like SPY sometimes. So if we come into SPY and we look here, and this is going to be a 0 DT, let me look back at those contracts, but just food for thought, even the 390, we'll use where were we at on this level? I just want to make sure. So on SPY, I just want to do something at the money so you can get the best example possible. So 381, 382, is that right? Sure, real quick. Yeah, so 382. We're gonna go over here, 382 right here. They're $8 now. Well, you'd have been really happy if you would have held those things all day. And then as you come in here, we're gonna look just real quick at that morning action that you had here on that pullback. So again, you're gonna have more time on these. So this is a contract that's not 0 DT. This is actually for the next Monday, right? So these contracts you would assume they'd move less than the apples, which are 0 DTE. And as you look here, they go from $4 all the way down to $2.50, right? Make sure, right? 905, make sure. Yep, that same time period right there. So look at that pullback. You even pull back almost 20 over. I mean, that's almost 40%, give or take, roughly close to 40%. $4 down to 2.5. So even with that SPY pullback and Apple being 0 DTE, you were safer on that Apple position. Why? Because Apple was such a strong stock. And this is, comes down to, fundamental knowledge and just overall viewpoint of the market. But that's sometimes why it's better to pick a stock than, even, an index, even though you're projecting how it's going to move, right? Just food for thought, things of view and look going forward here. And then Apple proceeded to, rip up off this level as well. Apple, you had a few opportunities as well based on these key levels. You'd push up through, and then ultimately it's picture perfect of what you want, of what you love to see. You come up, reject a little bit, break up, retest, continue going. Same thing here. Come up, reject, break through, retest key level 154.7, keep going. Literally beautiful. Now here again, this is the caution with the 9 EMA, and how it can be a little bit counterintuitive sometimes if you're using it as an entry signal, because you get your touch here of your key level right there. So that would ultimately be your level to where you want to enter. And really you have a great opportunity here, because if you want to enter this trade, you pretty much enter right here and you're given a great opportunity. So I would have put my stops a little bit below, maybe even drop them below VWAP. That's really aggressive. But what I would have done is moved them a slightly below your previous lows that you had right here. And I would have moved and aimed my target at previous highs. And then from there, I would have slowly started cutting once you hit that, and then left a few runners to go. But ultimately, that was the action that you had there. Does that make sense there as well? This is actually a different perspective of getting an entry, but you can see this is more of a key level type entry as well. But you also would have had that same signal right here. You just would have gotten a little bit later at 155.4 instead of 154.7. And I actually saw this, but I didn't want to enter just because my risk to reward would have been skewed. Any questions on this one?
I had a question, even in regards to what you're talking about the 9 EMA. I typically use the 9 EMA after I get into a trade. Is that more so is that like a bad perspective? Because I kind of, how I view it is, you're kind of buying a weakness, and then like you're kind of cutting out. You're waiting for it to get above the 9 EMA, and then once it does, if it has that strength and keeps pushing up, and then kind of like once it starts breaking that 9 EMA, I'm like, all right, it's getting weak again. It's time to cut it.
No, so that's what I was saying in the beginning too with J Ream, because me and Jay do use an IMA a little bit differently, and you can use it like I always say this too is like no one's gonna be an identical same trader, right? It's important to realize that to know you're gonna have differences, and that's okay. However, I think 9MA just gives you more confirmation on a trade, right? I want to make that really clear. Like this was a great example. Like you could have traded Apple, and then once you got above the 9MA, you feel really comfortable, really safe, because I wouldn't have necessarily wanted to exit this trade until you broke back below that 9MA, which you saw way up here at 156.8, right? So you don't have to. And sometimes that holds me back from getting into some trades, right? But I'm a little bit more cautious with some of my entries because I know if I post it for everyone, there's 900 people that are also going to see that trade, right? So I'm typically looking for safer type plays as well. But I do want to highlight that right here was a perfect example of not having to use that 9 EMA. And sometimes with stocks that are very strong, like I said with Apple, you're not going to get that opportunity because they're just so strong and they're not going to touch back to the 9 EMA, right? So I want to make that really clear as well. So the 9 EMA, at the very minimum, use it like you're using, right? Use it just as a support as you're moving along in your trade, either to the up or to the downside, right? You don't have to use it as an entry signal. As the very maximum of what you want to use it for, it is an entry signal and it is a major support because there's a few ways you can use it, and there's a ways that me and Jay always talk about as well, right? Using it as a continuation, like right here, you flag, touch, bounce back up, right? So you could have hypothetically gotten at 156.11 and rode it up till it got to 157.5 if in a perfect world, right? So I want to address that also. Does that make sense?
No, yeah, that makes sense. Like, I think it's just learning how to use it in different markets. Since we've kind of been bouncing around so much, I kind of only been looking at the 9 EMA one way as opposed to how to use it in more so a stronger environment for like a continuation up, as opposed to like, oh, if it breaks down, if it touches here, then you'll probably see it break under. If it holds under, then wait for it to kind of flag down to give you continuation.
Exactly. Yeah. So it's both ways for sure. And as far as, and I know this has been a problem with a few people, as far as we've been so bearish and then we're flipping back and kind of knowing when to flip back and forth as far as day trading goes. That's extremely difficult to know, and et cetera there. But specifically with this comes back down, and we're getting a little bit off subject, but this comes back down to really supply and demand if we get to it. And this is really what Jay harps about the most with his supply and demand is ultimately you got to look at it as two ways. So let's hypothetically just use this as an example. So let's say we have our I'll color code it to make it a little bit easier to see as well. Level here, and level here. Okay, so we'll use this as a neutral zone. We'll use this as this one green, and then we'll make this one down here red. Going somewhere. Okay, so let's hypothetically say, and we'll say price is starting at. I don't want that on. Sorry, my drawing tool, it's pissing me off. It's like locking to everything. I don't know why. So we're gonna get in here. So if we're looking at the chart, and we're just gonna use this as an example, and we're breaking down, right? We're breaking down. Say this is a demand supply level. This is a demand level when we're broken down out of this. So when we're in this range, in my opinion, our target has to be, this level down here, our demand down here, our next demand to the downside, right? That's going to be our magnet area to touch, right? So you have to be looking. This is just, broad viewpoint of what we're doing here. And so as you come down, you hit your target. Now out of this range, I say it in almost every video. When you hit your target, you hit your demand. Your next expectation has got to be to get a reaction out of it back to the upside. Now, does that mean that we go all the way back up? No, but it has to be towards that upside pressure. And so if you come out of this with any type of volume, etc., even with no volume, typically just blind looking at this, if we come down into a demand area, we expect to get a bounce out of it. Jay always says it. We always say it, right? And so as you come back out of it, right, you're expecting that upside momentum. Now, you could have and be cautious, for upside positioning until you get back above this area, whatever your next supply might be. But as you break above your supply, you have got to be looking for where, right? After you get above that supply level, your next supply level. That just has to be ultimately where you're targeting is back to that range. And so when we look at ES, right, I just want to be really clear with where we're at. I know we're not getting the most beautiful chart here. I'm going to go over to Trend Spotter because I just have it drawn out already. Do I not have it drawn out? Sure. I do not have it drawn out. You're kidding me. But I already had it on here, guys. ES is on. I have 0 areas marked for you guys already on trends. So I just cleaned all my charts off. That sucks. Okay, so if we're looking here, right, and we'll use NQ as an example. I'm just going to clean this all off really quick and mark this out for you guys. So on the 4 hour, I'm going to get rid of the indicators as well. It just clutters it up. This is one of the reasons I don't like trading view. It's very cluttered. We're going to mark out our demand level or supply level up here. Roughly this area right here, right? I'm guesstimating on the daily, but that 11.7, 11.6 area coming up here, right? Then there's also the next area we know right here, 11.44, which was a major level, and then we'll come down to our supply, which right now would have to be around right here going forward, right? So right now, this is where we're operating in as we speak. As we are moving, this is where our overall range is and how we're moving right now on the chart. And so if you're looking at upside potential, we have to recognize where we're at. And so we start getting that bounce over, going into market open, etc. And the market opens around this area, and then we start moving back up. And so we go to the 15-minute chart, and we can see here, market opens up, you bounce up, bear bull flag, and you start trading up. You'll notice I was not trading the upside in the beginning of the morning, right? I was not looking at anything. Then once you broke 11.44, I looked at upside on Apple, and then eventually you got that retest here on that little flag you had here. But ultimately, your target here, and even Jay said it, right? Even when I started entering my dated puts, which I said I was starting to establish a position, I got a little bit of heat from it. Jay even mentioned it right here. I go right to Jay Reams, right here. So going back to at 11 or 12, this is around noon. NQ got room to 11.7. So right here at noon. So what does that mean? As you get above that 11.4 area, Jay's automatically assuming you're going towards your supply, right? So that's how you have to start looking at the market, right? And I get it. And that's when I even say to, and I'm really careful to make sure I'm saying this back to you guys. On a long-term viewpoint, I still assume downside, right? Like it's really clear, like you have to assume downside. But you have to recognize what you're trading and how you're looking at the market, right? Are you looking at it from a short-term viewpoint, or are you looking at it from a long-term viewpoint, and where are you trading? So when I'm scalping, I'm looking at it from what are we doing right now in the next hour to 2 hours. When I'm looking to swing, I'm looking at where are we at and where are we going to go and what news is going to be coming out over the next few days. So that's the difference here. And so that's what you kind of have to always be aware of is where are you at, how are you reacting, and ultimately where are we going to go. And I know this can be difficult to understand. I know it's not going to be super simple to understand, but hopefully you can see this as well. This is where kind of the tables turned on Friday to see more upside. To help out at all? Hope so.
Yeah. Not to oversimplify like what you just did, because I know it's a little bit more complicated than that. But like just seeing you kind of like quickly mark out like supply and demand zones and things like that. It looked like when you like kind of zoomed out and just kind of looked at like where your local lows were, and then kind of took it zoomed out a little bit and just kind of marked out real quick where your your local highs based off of where like those I guess you could say like those local highs and touch points were.
What do you mean? Further out?
Yeah.
What do you mean?
No, no, no. Like when you were drawing on the chart, like when you were like estimating the supply and the demands.
Yeah, what about him? Trying to.
Like it was just looking. I could see where it was, but it just didn't seem like, you know how we kind of like looked at like you know how we kind of look at, you know, drop base rally, things like that. And it looked like when you drew your supply real quick, you were kind of more so estimating, just kind of going off of, all right, I can see what this is where we ran at based off of the local highs and where we were sitting at.
I'm trying to see. Is there a question? I didn't understand. That's what I was trying to understand. I didn't get what you're
It
asking.
was more, you know what? We'll just press on. I'll write.
No, I'm being serious. No, it's fine. And no one else really has a question. No, it's really
Okay,
fine.
yeah. So like where you were drawing, like when you went on the daily on like NQ, and when you were like drawing like real fast,
Yeah.
you just kind of marked out like, okay, this is where it looked like we're running to, and that was based off of, it looks like right where your arrow and everything was.
Yeah, right here. Yes.
Yeah.
Really, actually, this would be your supply coming back here on the 4 hour. It'd be right here. This is exactly where it'd be. I was estimating right here, but yeah. So I don't. But was there a question? I just didn't understand if there was a question. I was just making sure.
It was a question. It's more like it was like an observation slash question, like.
Well, yeah. So basically what I was saying though is
Like where you kind of marked your supply at. So that's all it was.
yeah. But what I was trying to answer the question more of being able to realize when you have to flip back and forth between bullish and bearish and knowing the difference, right? Because you can be, and people, this was like the biggest thing for like when I was making those original videos on YouTube, is people didn't understand and people got really upset that I could be short-term bearish on a stock, right? I could say, I think long-term we're going to go up, but over the next week, I assume we're going to go down based on what we're doing right now. You know what I mean? And being able to spot that difference of where things kind of change, right? And that's where you have to be able to notice some fundamental things. And I believe the whole move that you're getting basically on Friday was purely like fundamental and stock based, right? It was all based on Apple. It was all based on news. It was not really based on technicals, right? Because based on technicals, you were just dumping, right? Now you did get a bounce. You can come back here on the 4 hour and look. In my opinion, this is your 4 hour little supply that you had right about here, roughly. It would be hard because it's a little wick right here. You could say you came down into this level and you actually would invalidate it right there with that. You can see you came down and then you bounced based off of that news. But where, in my opinion, if you were a day trader looking for a continuation to the upside, it was this level right here, because we know going back to the previous day that we could not break below this strong support. We kept bouncing, 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 and then eventually flipped, rejected, and then dumped, right? And so for me on Friday, where I flipped and was like, okay, you can start safely trading some scalps to the upside, was when you got above and you mounted this area, right? And then you're assuming once you get above this area, you're going to go back into your supply back up here towards 11.7. And so I was just trying to clarify is you have to look for little discrepancies in the chart to see where does that kind of flip, right? And I was just trying to use that as an example for this week because it was such a good example in my opinion. Good stuff. Good stuff. Okay. Dave, he says, damn, bro. What were we saying damn about? What did I say? Did I say something wrong? I don't know what you're saying that about. But what do I think? Well, oh, no, I got off the live and I cleaned everything off because it was all so cluttered. What do you think will happen now with ES and NQ and supply? Okay, so this is, I mean, I don't want to go into like broad statements, but about like, the whole market. But just from food for thought, obviously I anticipate downside from here. And I mentioned this coming to 320. I did not think you would hit 325 on Friday. I did not at all. But I said, I assumed if you were going to get a push to the upside on the daily level, you have a clear cut supply level right here on the daily. It's super, super clear. You come right here, use this, market. You can, in my opinion, that is a clear cut supply level. I think I don't think it gets much more clear than that. So I assume you're going to get rejected from this level, right? That's just what you have to assume if you're using this, right? Now that does not mean that you have to trade it based on, or you still want to wait for an indicator based on volume or what's going on here. But if you want to be aggressive, you have the opportunity to do so here and still have tight stops and still have good risk management, right? So if I'm coming in this, I could hypothetically enter near the top of this range. If I'm going dated out on a position, have a tight stop maybe at 350, whatever it may be, and still target back down towards my next, demand or wherever that may be, and still have a great risk reward setup. Now, is this a more aggressive entry? 100%. It's way more aggressive because I'm entering with no signal other than we're in supply. And we know there's a little bit of danger, and we've seen us just push sometimes through a supply level and invalidate it, right? But you can still enter this type of trade, and you have to assume, and this is never a good time to go long, though. That's the number one thing. We don't want to go long in a supply level. That's not your goal there. You want to see how you react from it. If you're going to continue to go long, you want to see a break above and then a retest of that supply, a break and retest, drop base rally, etc. Things that we look for there. But here, if you want to, you could aggressively go into that play, still have tight stops, and it's still setting you up, and it's still a good trade. You just have to know that you have no clear direction or clear signal that sellers are stepping in yet. That's the thing there.
Question. I mean, it's on topic but off topic. When you're playing in like larger supply zones, and you're expecting like a rejection, but let's just say that supply zone, let's just say we're on like ES or something, and it's like 25 points or so. Like,
This is a great example. This is like 50 points. This is
yeah,
actually like
yeah,
almost 100. Yeah.
and that's what I'm saying. I'm looking at that. Like, at what point do you? I mean, I understand you say you don't want to go long, but like, what type of reaction would you look to decide? Okay, maybe it's better to play to the downside, or would you wait until it breaks through that supply zone to play upside or something like that?
So, I totally realized that this was all supply already. Like this is why I was already starting to establish my short position on Qs, right? And I recognize where we are, and I recognize what was leading the market. So you can still trade the scalps towards the upside if you really want to, but you have to understand where you're at and how you're moving, right? And that's the really clear point that I have to make here when you're trading something like this, right? The things you have to understand. And that's why, again, if you want to trade the upside here, why I would go with a very strong stock that's not going to get hurt maybe as much as SPY or something else, right? Like Apple. I'm going to continue to use that as an example because it was a perfect example on the week, right? So you can still trade that upside while you're in that supply, especially if it's larger. And then you can even zoom in more. So like if I'm looking at ES, I can go like to the 1 hour and I can look here. I'm going to get rid of this real quick so it's cleaner. And you can see where you're trading to, right? And so when we started breaking above 3,900, I was just quickly looking. I was like, you're probably going to go to this level up here because if you go to the 1 hour, we can see even more information, right? We can see where's the 1 hour supply, if you will, right? And you can come in here and you can mark it out directly. It's literally right there. That basically 39.20 to 39.36 range. And so this is where I see a bulk of the sellers. If they're going to step in, that's where they're going to really step in. If they don't step in here, I assume you're going to break through really strong. But if you want to be conservative and you want to take more swings, then you're going to want to focus heavily on, like I said, the daily chart, the daily, supply and demand levels. But if you're scalping, you can zoom in more and still try to play this action in here as well. And that's really the difference of, risk to reward and where you're at there. But also knowing the temperament of the market as well. And we knew on Friday that we were just bullish. We were just pushing up all day. Sellers would step in.
All right, makes sense.
Dave, was that a pretty good example for you? I just want to make sure. Hey, AWOL, are you gonna post that chart or not? I don't know where you're talking about here, man. Sorry, I really don't know. It's too hard. I can't I just can't assume where you're at. It is worth mentioning though on SPY that you never had one hold. I think this was your only hold right here below the 9 EMA. Was that 11? And then you had it again at 105. That was it. You had 2 candles hold below the 9 EMA. all day long, even from market open. Anyone else though? I see AWOL typing, but I'm just making sure anyone has questions. I feel like those are really good examples though for some of these entry signals, etc.
No, they were. I think they were solid entry signals. It's crazy how 2020, like how hindsight is so 2020. When you're like looking at the chart live, you're like, I don't know. But when you go back, you're like, oh man, that was perfect. That's clear as clear.
And that's the psychological part of it that no one's really gonna be able to train someone for, because like I said, I'm really clear, and that's why like I love like Discord. I think it's such a good like helpful tool for everyone. Is like because even when we were right here, I know for a fact Dave was in the live chat. I'm pretty sure I saw him in there, and maybe RMA or Ray. I'm not really sure. Maybe AWOL too. I don't know. There's too many people in there now, so I can't really check everyone's names that are in. But I was talking about Apple the whole time here, and I was being a greedy cunt. That's all I was doing right there. I just wanted a perfect touch. But looking back on it, I was like, Apple's the best play here. It is what it is. And then going back to Microsoft on Monday, I can talk about Microsoft basically, all day long. Monday was the trade of trades right here, going into earnings. So you can see going into earnings, pull up the opens indicator. I love opens because it just kind of like makes my chart a little bit cleaner. But this 241 level, me and Jay had been talking about it for so long. Anyways, you opened up, you push through, you got a perfect retest, and you bounce through. And this trade was just disgusting. You literally just went straight up to 250. But yeah, I mean, I was so mad about missing this trade that I just didn't trade for the rest of the day. But yeah, so as a review, I don't like my setup as much as I did. This was I feel it's better to focus on supply and demand zones on larger time frames for swings and then use key levels for scalping. I agree. I agree. I think supply and demand just shows you your trend, in my opinion. I think supply and demand are going to show you which direction you're moving. And that's kind of what I was trying to say to Ape and trying to know when to flip from bullish to bearish, maybe on short term trades. And this is even a weakness of mine sometimes. Like sometimes I just won't trade unless I'm really sure. But that's what I've been doing. I just won't trade if I'm not sure. But like the old me would just continue to trade even when I wasn't sure, and that's just it corrected. It really made the losses a lot less. It reduced them quite a bit. But yeah, Ray, that's actually a really good example. Is supply, and that's kind of what I was trying to say though. Is when you come to supply and you bounce, you trade it back to that key level. You expect it to come back to a certain point, right? It's just showing you that trend. And if you break through your supply, then obviously you're looking for more blood. Or you break up through your supply, looking for more green. If you break down through a demand, then you're looking for more blood, right? Certainly. But yeah, also too, I don't want anyone like, I don't think anyone's like ever specifically in premium. I don't think anyone's ever made anyone feel bad for or stupid for entering on play. I think the only one that ever takes heat in here in premium is me, or maybe Jay. Right? We're gonna roast each other, but like for the most part, you guys should never feel like dumb for any play, right? For anything that you're entering, because ultimately, right, like you're here to get better, and no one's here is gonna make you feel bad. Now, if you do the same thing over and over, we might crack a joke or two, but yeah. So far, these are pretty decent questions. I was worried in the beginning. I'm not gonna lie. As far as next week, guys, too. While I have y'all, I'll let y'all kind of be the dictators of it. For next week's lesson, what are y'all interested in? And again, we're probably gonna go over key levels again in the near future. We're probably gonna go over supply and demand again in the near future, just for newer people as well. And I know you guys aren't supply and demand and key level pros, so we'll probably do everyone good. But I just kind of wanted to spitball ideas for next week. Right now, this week, 100% tomorrow we're doing risk and reward. I think it's going to go a lot better. But yeah. Is there anything specifically y'all We could do a more. We could do like a full detailed, and it can be beneficial too for everyone for like entry and exit signals and leaving runners, etc. But I just didn't know if there's specific things people have been struggling with. I know this week was slower, but I think sometimes bad weeks are some of the best times to, or slower weeks too, are the best times that highlight some of our flaws. So, like, is there anything people were struggling with specifically on this week that we can set up and get examples for next week? And that's the cool thing with PowerPoint too, or like using it. And first of all, you're all gonna have it, but also too is like we're gonna be able to put more live examples on there and not have to shoot from the hip with that. So when y'all go back, y'all can go back and look at things from the week that we just traded in. So like all the examples I'm gonna use for risk reward are gonna be from this week.
I think I mentioned it before. It's not as bad as I was before, but I still have some troubles with like market structure,
What do you
like
mean?
clearly
Say again.
recognizing market structure.
Okay. Like market direction, right? Like knowing which.
Yeah, market direction, and
Okay.
even like I know there's like three types of market structure. You got uptrend, downtrend, you got like range, but like sometimes like I think it would be more so how to accurately use market structure and not so much of recognizing what it is. I mean, I could look at an uptrend or downtrend or, see that we're ranging, but like kind of, I guess, piecemealing that together with like even sentiment. So you can kind of know how to properly gauge, your trades and, put together a proper trade plan. So like sometimes I do get a little bit lost, like you said, even like flipping from bullish to bearish and things like that. So, and I
Okay.
think that has a lot to do with how I look at the market structure.
All right, sounds good. That's perfect. I think everyone will like that. Okay. Jeez, it's already been 50 minutes. Holy shit. Honestly, I swear these like workshops and lessons, even out in the after hours, sometimes I'm not gonna lie, I kind of get lost.